Hello everyone, can you hear me clearly? If you can hear me clearly, no need to reply anything. If you cannot hear me, can reply N in the live section, live chat section, so that let me fix everything, make sure everything's okay. Hello everyone. Okay, nice to have you back for my live broadcast. Thanks for your support. And today is Friday, right? So Friday is the end of this week. So no summary, no improvement. So mainly I want to help you make a summary on the recent performance of the stock market. So I will talk about the turning point, which is the key to market movement. Because recently we know that the market all turned quite bearish, right? So, but how it happened? How had it turned from the previously quite bullish market until August, and then turned to a bearish until now, right? So, how do we find this kind of turning point? And today I'm going to introduce you to a theory of George Soros. I believe you all know this guy. This is the famous investment guru, right? So he has a very famous theory. I will explain or make a summary on the recent market turning or the recent market performance based on this theory of George Soros. Okay, the second part, we will discuss your individual stocks. I will help you diagnose your own individual stocks. Okay, so before we begin, I still need to remind you that all the stocks mentioned in the video are for the purpose of demonstration and education, not recommendation. Investors should be aware of the risks involved in stock trading and take full responsibilities for their own tradings. And if you haven't yet subscribed to the channel, can just click this subscribe button. Click subscribe, and then beside the subscribe, you will see a bell. Just turn on the bell. Make sure you have chosen the option all. After that, you will be immediately notified when I upload anything new. And also, I hope that you can share with your friends, make more people know about this channel and come and join us, so that more and more people can come and improve and learn together with me and with us, and your support will be my biggest motivation. Okay, so let me share with you this famous theory of George Soros. This famous theory of George Soros is called reflexivity. Have you ever heard about this theory, reflexivity? Based on this theory, our collective thinking is what moves the markets and produces winners and losers. This means that what we think about reality affects reality itself, and that reality in turn affects our thinking once again. So means there is some interaction between our expectations and the reality. So this explains why sometimes we feel that, wow, the economy is so bad, right? The economy is very weak and it's becoming worse and worse, but sometimes the stock market is still remain quite strong. Why is that? The stock market, it is supposed to reflect the reality of the economy, but sometimes we see it doesn't. The stock market, it doesn't reflect the reality. Just like after the COVID-19, right? The stock market, although it crashed for 1 month from February to March, right? But After that, the market quickly gave us a forceful rebound, especially the US, right? The rebound after the March 20th, after March 20th is a very forceful rebound. It's a V turning for the US market, right? So if you check the economy, it's not possible that the economy can recover so quickly. In just 1 month, then the economy suddenly recovered from all the damages caused by the COVID-19. Not impossible. Then why the market just become so bullish after March? That's because the U.S. government it has taken some very forceful measures like the interest rate cut, which is the most powerful weapon, right? And some other measures have been taken, and people's expectations about future become more and more optimistic. That's why we see the stock market still begin to turn upward and keep going up until August, right? So the economy itself, it doesn't recover at that fast speed. Maybe it is slowly recovering, but it cannot recover in just so short a time, right? So then why? That's because people's expectations about the future performance of the stock market or about the economy recovery is optimistic. People are optimistic about the future. That's why the market can recover at a very fast speed, right? So this means what we think about reality affects reality itself. When more and more people think this way, that the market can recover very soon, the economy can recover at a very fast speed, then more and more people would join the stock market to buy long. So then this positive feedback will be strengthened, right? But it will not remain like this all the time, right? So sooner or later, the market would change direction again from upward to downward. Why? Because maybe we know that the recent big drop for the U.S. market is mainly caused by the big corrections of the high-tech giants, right? So the Facebook, the Apple, Amazon, Google, these high-tech giants, they have dropped very sharply recently. That's what dragged the U.S. market down, right? That's the main force dragging the U.S. market down. So why is that? Because more and more people begin to think that, wow, the high-tech companies, they have been extremely overvalued. They have been extremely overvalued. If you check the charts for the high-tech giants, for example, Apple. Okay, so from the bottom is March 23rd, right? March 23rd. And until the top, let me remove the signal first. Later, I will share with you the signal about Tai Chi. And let's say the bottom, 23rd March, and the top, 2nd September, right? So if we calculate this rally, how much is this rally? It has risen by 112% since March until end of August or early September. The rally is already doubled. The price for Apple already doubled, right? So that's too much. People are thinking that it's too much, right? So when more and more people begin to think that, wow, the high-tech companies are too extremely overvalued, then people would so this will be another expectation as against the previous one. Previous expectation is people optimistic about the recovery of the economy and optimistic about all the measures taken by the government to recover the economy or the recovery of the stock market. People are optimistic. So that's a positive feedback, positive expectation. But as the high-tech companies become, the price become higher and higher to become extremely high, then there is some other expectations come, which is, wow, maybe it's about the time that the market should drop to get some rest, right? So then when would so means what? The turning point is the most important thing. If you can catch this turning, let's say from the it's extremely pessimistic and to begin to become optimistic about the market performance. So if you can find the turning point, well, then you can catch the opportunities immediately, or you can avoid the risks immediately, right? So how do we catch the turning point? Because the turning point is something like the expectations begin to change. The major expectations of the majority investors or participants in the market begin to change a bit. So when do we get this key turning point? This turning point is very important. This is the key to the market movement, how it turns from downward to upward and from upward to downward, right? Okay, so if you don't check technical analysis, this kind of key points, they always happen, or they are actually decided by some big institutions which have the biggest amount of money in the stock market. For example, George Soros himself, who has developed this theory about self-reflexivity, right? So he himself used to try to, let's say, change the market expectation. So we know his famous quantum fund, right? His famous quantum fund. So this fund has some very remarkable performance in the past. And if you're interested, you can Google it. And you Google it, and you will find the details about how George Soros have tried to manipulate the market performance to become to create the opposite expectations against the current general expectation. But of course, George Soros himself, when he tried to create such a turning point, he has to try with some small amount of money. If the market still, the previous expectations is still very strong, he would give up. He would wait for another timing to try it again. So means what? Our expectations about the market, when it becomes stronger and stronger, because there is the interaction, right, between our expectations and the reality, right? So when this positive feedback becomes strengthens, then sooner or later it will become extremely weak. The general expectations about the market will become weak. When it becomes the weakest, then some big institutions, they will try to create an opposite expectation. This will be the beginning of another turning. Of course, after they create such a kind of opposite expectations about the market performance, they need people to follow them. If more and more people follow it, so the positive or the negative feedback would be formed, and then we'll enter this interaction process again. So means when such kind of negative expectation formed, and more people begin to believe it, then the market would change direction, and such kind of negative expectation will be strengthened and more, and then the market would drop more and more, right? So this is how it works, how the market turn direction based on let's say from other angles than technical analysis. But we don't know who would be the institution that try to manipulate the market performance, and we don't know when they would do it, right? So as a ordinary investor, so how can we also know such kind of turning points? In homely software, we have an indicator called Tai Chi signal, right? So Tai Chi signal is a very powerful indicator. Tai Chi signal, it can tell us, we mentioned this signal before, right? It tells us the extremity of the market. When the market is extremely bearish, then we will have a blue Tai Chi. When the market is extremely bullish, we will have a yellow Tai Chi, right? So Tai Chi signal tells us the turning point for at least medium term to long term. Okay, so if we check, for example, for Nasdaq, right? For Nasdaq, if we check the weekly chart, so if I switch to weekly chart, you will realize that at the top, this February 21st, this top, the weekly chart, Tai Chi signal, yellow Tai Chi at the very high, and then at the bottom, weekly chart, 27th March, this is the bottom catch signal. So this will be the turning point from upward to downward. This is the turning point from downward to upward, right? And then you may say, wow, this is another one. This yellow Tai Chi, it doesn't work because the price didn't drop below the low price of the Tai Chi signal. So you can regard this Tai Chi like as something like the institutions, the big institutions, they try to test the market expectation to see whether it's still the current general market expectation is still strong or already very weak. If they tried the general market expectation still quite strong, then they feel that it's not the best timing, they would give up. So this is some attempts by the big institutions, but they will try for several times, and finally in the end, this time successful, because after this yellow Tai Chi signal, we suddenly have a very big drop in just 1 week. After this, some big movement, more and more people would pay attention to this, and more people would change their previous expectation about the market. Because at this moment, when the yellow Tai Chi signal appear, the market expectations have become extremely weak. The previous market expectation has become extremely weak. So a very, even maybe the last straw to change the market expectation, that would be the manipulation by the big institutions, right? And how do we confirm it is they are successful? Check whether or not the price dropped below the low price of the yellow Tai Chi, right? And also at the bottom, it's the same. When the big institutions, they feel that, wow, it's about the time that the market expectation already is the current general expectations quite bearish, right? And already reached a very already reached a summit. When you reach a summit, it is the weakest moment, and then they will try to manipulate the market performance again. And then after that, people see the forceful rally, more and more people would follow, especially the ordinary retailers. They begin to follow, and they begin to change their previous expectations about the market. That's how the market turn. Okay, and then the recent performance let's check recently why the market suddenly changed to bearish. Okay, so we have Tai Chi signal, yellow Tai Chi. The first time it didn't drop below, right? The second time the price dropped below the low price of the yellow Tai Chi. Actually, that's the confirmation. The market is the expectation about the market is turning from previously bullish, optimistic to pessimistic, bearish. And then when the price dropped below the yellow lines, because our homely rainbow yellow lines and the homely rainbow, this indicator itself is also based on moving average. It's also related with moving average. And if you check the simple moving average, the ordinary moving average, you see that the yellow line roughly would be at the same level as the 60 days moving average, right? 60 days moving average, but homely rainbow is much more stronger, much more complicated than the normal moving average. We have our secret formulas behind, right? But never mind, because all people who are checking the technical indicators, who are checking moving average, they will see this, that price already broken down the 60 days moving average. If for homely we check the yellow lines, price already broken down the yellow line of homely rainbow. It means significant. It's a significant thing because more and more people will be confirmed already the market turned bearish for at least medium term, because people are all checking the indicators. People are all checking moving average. For homely members, for me, I'm also checking the homely rainbow. Yeah, it already dropped below the significant support level. More and more people would believe that it's already turned weak, turned bearish. Then if more and more people think this way, of course the market would drop. Yeah. Although last night the price gave us a rebound, right? Last night it's a forceful rebound, but this rebound cannot give people enough confidence to think the other way, that the market already turned bearish. Unless recently the price can really go back above the yellow lines again, then maybe people means this expectation about bearish market already ended. But that's less likely to happen, right? That's less likely to happen unless there is some very forceful interference happen now. Maybe by whoever it might be, whatever institution it might be. Maybe if after some very strong interference by the government, by the U.S. government, or by some big institutions, then to try to change the current market situation, market expectation, then maybe the market can become bullish again. But that's not likely to happen. That's not likely to happen. Okay? So yeah, this is how we can know the market take turns from bearish to bullish and from bullish to bearish. You check individual stocks, it's the same. So for as ordinary investor, if you don't know who will try, which is the big institutions who that will change the market direction or manipulate the market movement, or when they would do that, then you can stick to the homely rainbow. Stick to the homely Tai Chi signal. The yellow Tai Chi tell you that it's very close to the top, and the blue Tai Chi tell you that it's very close to the bottom. See. See, right? This is, of course, this is back in 2018, the blue Tai Chi signal. Yeah. So that's what I want to share with you, because this knowledge, they are very useful. If you have learned, have understand these theories about stock investment, then they will help you with your analysis in future. Maybe now you don't see too much about this theory, but in future it will help you a lot. it will become a part of your thinking pattern. How to do the analysis, it become a part of your thinking pattern, will in the end help you greatly with your investment. Okay, so means today I actually share with you some knowledge, how to some knowledge about the George Soros's reflexivity theory and how it works, and also for Homely, how we can combine his theory with our indicator Tai Chi signal. It's very powerful, and I find it's quite interesting. George Soros's theory, it actually resonates with our Tai Chi signal. That's a very interesting phenomenon. Okay, so now we can diagnose some of your individual stocks. Do you have some individual stocks to diagnose? And you can write it down in the live chat section, or you can WhatsApp me privately. And when you try to post or when you try to write down your individual stocks, maybe let me share with you some the performance of some individual stocks for Singapore and for US market, because 2 days ago I mentioned about Meditech, right? And also several other healthcare stocks, healthcare individual stocks, right? Okay, so for Meditech, after the buy point here and the confirmation, until now, if you have bought, you still can hold, because short term, we see a deviation expert tell us that money still is beginning to flow in. Money begin to flow in, and for Homely Rainbow, we see that the price is still below the yellow line. The yellow line here is acting as resistance. We need the price break up the yellow lines, because the yellow line will be the final resistance level. This is for Meditech. And apart from Medtech, several other healthcare stocks, let's say 418, UG Healthcare, right? So for UG Healthcare, we see the price already above the yellow line. So this morning when I was checking the performance, actually UG Healthcare, the rally was as high as much as around 7%, but now we see that the rise is only 2%, right? Around 3%. So means what? Currently, the market still the selling pressure is quite heavy. We still faced with very heavy selling pressure, sell pressure. Okay. Because we check the indexes, the performance for indexes, for STI, it already turned bearish, because we mentioned about the 2,500, the strongest support level, right? Recently, it's already confirmed that the price below the level 2,500. Currently, the price for STI is 2,461. About remember what I said just now about the reflexivity theory. So once the price drop below the 2,500 support level, because people are all looking at the level. When the level, when the bulls fail to hold this level, then means people would come to an agreement. More and more people would come to an agreement that market already turned bearish, at least for medium term, right? Means the expectations have been changed. More and more people have changed their previous expectation about the market, right? And then that's why we always need to stick to the strong stocks. Then why we check UG Healthcare, why we check Meditech, because they are strong, they are in uptrend, and also they have a lot of big boys. That's why we stick to the strong stocks. When the market is weak, the strong stocks have greater chances to help us make profit, right? And we will be safer to stick with the strong stocks. How to know it's a strong stock? Multicolor dragon. The big boy is still around above 75. So you stick to them, then you are safer, right? And UG Healthcare, so Meditech, you check, it's also the same. Meditech strong the big boys strong. The only problem is now the retailers they are not disappearing. After the retailers disappear, then we may the price would go up at a very fast speed. Yeah. Meditech, UG Healthcare, and Riverstone, right? AB4 Riverstone. And Riverstone, also this morning was checking, the rally was quite forceful, reached almost around 7%, but now it's only 3% because the yellow lines here also strong resistance. We have some retailers, right? And then 505 Asia Medic. Okay, so Asia Medic, where is red and white circle? Asia Medic, yesterday that's a buy point for yesterday, but today we don't yet have the confirmation because yesterday the shadow is very long one. Upper shadow is very long. Resistance. Upper shadow is resistance, and we check this one. The big boy is slightly weaker than the other three, right? So retailers are also there. So this one is weaker, right? But for this one, Asia Medic, the position is lower than the rest. Because for Riverstone, for Meditech, and for UG Healthcare, it's already very high, right? It's very high already. But for for Asia Medic, the price is not that high. It's still close to the bottom area. Maybe if those are the several others, they are too high, more and more people would try to focus on this one. It may have potentiality in future, but you need to monitor whether or not the big boys in future can reach 50 and remain above 50, even 75, and retailers will disappear, right? So this is for UG Healthcare. So currently the healthcare sector for Singapore, it seems like it's becoming turning strong again, right? That's because after a long time rise, 1 month and more than 1 month, the healthcare stocks, they are in correction or in sideways, right? So the correction is a significant correction. After that, and considering now we have the COVID-19 become serious again, the situation becomes serious again. Many countries there happen to be some second wave, right? So that's why maybe the healthcare stocks still have potentiality in future. Okay, and then apart from the healthcare stocks, I've previously also talked about Jiutian Chemical a bit, right? So today is the first recycle. Jiutian Chemical today is the first recycle. Okay, so you also can pay attention because we stick to the strong stocks. Strong stocks must be in uptrend, and also we need the big boys at least 50%, right? And retailers, the problem is now the retailers still there, didn't disappear, right? But you can pay close attention to this. We need a confirmation based on the recycle. Today is the first recycle, but we need a confirmation tomorrow. Jiutian Chemical and BUOU. I mentioned about this freezer previously, right? So the buy point is here. The second day, that's the confirmation. Until now, we still if you have bought based on the signal, you're still holding. And we check the deviation expert, the money inflow becomes a bit weak, but it's still okay because the trend is still, for short term, is still recycle means still uptrend for short term. And also because yesterday there is one friend said he has bought CUSK, right? So for this one, when I mentioned this share, I already told you, if you want to chase after the rally, that's not a very safe move to take. It's not a very safe decision. So if you really have bought, actually that's the yellow Tai Chi. Remember what I mentioned about yellow Tai Chi signal? So you see, this time didn't drop below. This time drop below. So forceful correction. Get support at the yellow lines, and then another rally, then Tai Chi signal again. So already drop below. So based on the situation here, yellow Tai Chi and the half level of the long bullish candle here already broken down, right? Price already below the half level. And last night, it's a small candle here with long upper shadow, lower shadow, but I think that already the price is turned weak, at least for medium term, it already turned weak. So if you have bought at a very high position after the rally, you chase after the rally, this 20 more than, it's around 30% rally in one day, a big rally. After that, you buy, wow, it's really not a very good choice. Even you have bought, at least you need to stop loss when the price drop below the half level, right? And also the half level is around the low price of the yellow Tai Chi signal, right? So you need to stop loss because your buy point is wrong. You have to admit your risk, your mistake, right? To stop loss in time. If you didn't stop loss in time, I think recently you better consider to do that. Why? Because if you check the mini chart, go to Singapore, that one should belong to which stock market? Let me check again. COSK. Belong to Nasdaq, right? It belongs to Nasdaq. Let me change the Nasdaq. Okay, if we change to Nasdaq and we check the mini chart, then we will realize that in the mini chart, there's already a sell point. I'll show you later. This is for COSK. And then the other one is about Nike because there is a big upward gap, right? So I mentioned this one. After the big upward gap, you see, pay attention to the gap here. If the price drop below the low price of this candle, or which will be the top of this upward gap, right? So we see last night the price already dropped below, so means better not to touch, because if this will be the top here would be the support level. If the price cannot stand above the support here, it's a higher probability price would drop further to cover the gap. It's a big gap. It's more than 8% rally here. So if you try to buy now, it's not safe. Unless in future the price can go back above the top area again, maybe you can consider. And that's about Nike. Okay, in case they here I want to emphasize again, all the stocks I mentioned in the video is for the purpose of education demonstration. It's really not a stock recommendation. I'm not trying to recommend any stock to you. So means if you don't have the software, you are not a homely member, don't just try to buy any stock after I talk about a certain stock. Okay, because you don't have the software. You don't know when to buy and when to sell based on the software, and you don't have maybe the necessary knowledge, experience. So better not just buy a stock because I have mentioned it in my video. Okay, so if you're a homely member, well, you can discuss with me privately. Okay. Okay, so let me check your individual stocks. What stocks you want to diagnose? PTON. Today you only have one stock to diagnose. PTON 8YY. PTON 8YY. PTON. Okay, so for PTON, because I don't know whether when you buy it or whether or not you have bought it, and your current situation is you are holding or you are looking to buy. So I don't know. Just based on this chart, we have the yellow Tai Chi signal here. Currently, the price is still around the high of the yellow Tai Chi, right? But we see for for multicolored dragon, the purple line is still downward. So if you really want the price go up again in future, the big boys need to increase. The purple line need to turn upward. But currently, if the price still remain above the top of the yellow Tai Chi, it's still okay. Means in future, maybe it would turn upward again, because this is a sideways area, right? this is the sideway. So we need the price, we need the big boys turn upward, the purple line turn upward, and the price can hit a new high. For short term, when it's the sideway area, so you need to buy when you have the confirmation. Until now, although this is the first red circle, right? So after that, we never get a confirmation because the price, the close price after that never really stand above the high price of the first red circle candle here, right? So that's a buy point which not yet have been confirmed. This buy point hasn't been confirmed yet. Okay, so the other one, 8YY, right? So for 8YY, oh, I need to switch to Singapore because Singapore we check the real-time chart. We have the market is in trading now. We check the real-time chart. Let me check the next one first. U09. It's also Singapore shares, right? Singapore share. So okay. 8YY. Okay, obviously too much retailers, right? It's more than 80%. Retailers more than 80%. Currently, the blue lines and yellow lines acting as resistance, and I think this one for now may not be a very good choice. The resistance here will be very strong. It's not easy for the price to break up. Yeah. Even if it break up, I believe there will be a lot of ups and downs before the retailers can really disappear. As long as the retailers remain so much, it's not possible for the price to give us a very good rally. We need the retailers disappear, and we need the big boys increase. This may not be a very good choice for now. Of course, short term, you see the first red circle. It seems like currently, this day the price already above the high point of the first red circle candle. Okay, so confirm the buy point, but resistance above is too strong, I mentioned, and too much retailers. Okay, so this one, maybe it has risen 1 day or two, but if you check a longer time into future, it may not be a very good choice. It's not a very good choice for medium term to long term. Even for short term, not sure. It may not be a very good one to look at, because if you check real MA circle, it's already many red circles away. You want to buy? Cannot, right? Even for short term, cannot buy. U09, Avaga. Oh, okay. Okay, so for Avaga, we check. This is the first red circle. The second day, the close price still below. Today, the price higher, right? Today, the price higher than the high price of the first red circle candle here. You can see this is a short-term buy point. But this share you want to participate, you still need to be careful, because we need the big boys continue increase. But if you have bought today earlier, that's okay, that's good. But after price has risen by more than 8% today, if you want to buy now or after now, you buy it, it's a bit high for short term already. But if today when the market open and then you buy around that timing, it's okay. Because this is for short-term trading. Short-term, we want to buy as low as possible. If you buy too high for short-term, it will be easily for you to be stuck. It will be easy for you to be stuck there if the price drop, right? So yeah, this one, it is a buy point today, but you need to act very fast. You want to buy after 8% of rally, so that will be a bit high. If you must buy, you better try it in the mini chart. For example, you check the 60-minute chart. 60-minute chart is in red circle. Maybe if we in the 60-minute chart we have a red circle, have white circle, and next time it turn to red circle, you can consider to buy again. Or 30-minute chart. 30-minute chart also in the red circle. If it turn to a white circle, right, in the minute chart, then it turn to red circle again in the minute chart. Maybe you can consider. Okay, but now you want to enter immediately may not be a very good choice. This share has potentiality. At least the trend is up, and the big boys now is something like increasing. The purple line is within the red bar, right? It's like increasing, retailers are decreasing, and money also begin to flow in. That's a good sign. But I mentioned the buy point, the exact buy point. Now it may not be the very good buy point. You need to check the minute chart unless you have bought earlier this morning. Okay, that's a different story. You have bought earlier this morning, you can hold. You can keep holding. Okay, you can keep holding for this. Okay, so I think it's about the time, right? We call it the end today. Okay, so if you feel this video, this live broadcast is helpful, please kindly share with your friends. Okay, can tell them to subscribe to the channel. You search Amy Stock Analysis, then you will get my channel. You can enter any video, then click this subscribe button. You click subscribe button, then turn on the bell, then choose the option all. Okay, so your encouragement will be my biggest motivation. I really hope more and more people can join us. All else, maybe I will lose the motivation to produce more and more better videos in future. Maybe I will, in the end, if I feel it doesn't work that well, I might quit it, and maybe I will figure out some other ways. Okay, so that's all for today. Looking forward to seeing you next Monday. Bye bye.